there are two types of shares, preference shares and equity shares. So preference shares are having claims on the asset and income in the form of dividend before equity shareholders. So preference shares will have the preference on the claim on the income as well as on the asset before the equity shareholders get anything. Dividends, there will be a fixed dividend that preference shareholders will get, like just like a fixed percentage of interest, they'll get a fixed percentage of dividend with a cumulative option and non-cumulative option. Equity shareholders, there is no fixed dividend, there is no fixed rate, and their dividends are variable. If the company makes good profit, they'll get good dividends. Company doesn't make profit, they don't get dividend. Even if the company makes profit, getting dividend is not sure because it all depends upon the company. If the company wants to retain that profit, they may not pay the dividends. Okay. Redemption, both redeemable with maturity date and irredeemable without maturity date option. So the preference shares can be like a bond with a maturity date, or it can be without a maturity date, that it is like a perpetual, it just keeps on going. Equity shares doesn't have any maturity value, maturity date as such. It is perpetual, it's always perpetual. Conversion, a preference shares can be converted into an equity share. Equity shares, so there is no conversion option available. Stock splits. Now, companies may at times split their stocks. So one stock can become 2, or one can be divided into 5, one can be divided into 10 shares. So likewise, shares can be split into, one share can be split into multiple shares. Now, why this happens? Now, generally when a stock is split, so assuming the share price is 1000 rupees and the face value is 10 rupees. So one share is equal to 1000 rupees. Now what they can do is they can split this share into 2. So like this is one share. Now this will become half share. There will be 2 units which will be like equivalent to half share. So the face value will become 5 rupees, 5 rupees. And when the face value becomes 5 rupees, the market value will also become 500 rupees. Because that one share has got split into 2, so you will see that the share price in the market would also come down from 1000 rupees to 500 rupees. So this is called stock split. So in this, what happens is the company valuation does not change. Okay, why company valuation doesn't change? Because let's say if company previously had 1 lakh shares for 1000 rupees. Now, after the split, company, the number of shares are now 2 lakhs. But each share is 500 rupees. So the valuation will be the same. The company valuation doesn't change, even the number of shares increases, because each share ka price also gets adjusted accordingly. So stock split is more of a corporate action that company takes. It increases the number of outstanding shares. Price also comes down accordingly. The capitalization of the firm does not change. The capital doesn't change. The valuation doesn't change. What is the rationale of the stock split? Initiated after long upward price movement, makes stock looks more affordable. So generally what happens is when the price of the stock increases substantially, and at times it starts looking little expensive. So people, a common man who wants to buy that share, they might feel, okay, no, this share is very expensive, let me not buy. So when they split the stock price comes down. So it looks more affordable to a common man to trade on it. Makes stock more affordable. and it increases the liquidity. Why it increases the liquidity? Because in the market previously we had only 1 lakh shares. Now because of the stock split, the number of shares have increased to 2 lakhs. So with the number of units increases, the liquidity also goes up. Existing shareholders feel that they have more shares. So previously as an investor, I had 100 shares. Now after the stock split, I got 1:1 share. So my number of shares from 100 share, it has increased to 200 share. So for me also, I will feel that yes, my portfolio is increasing. I got more number of shares. That's a positive sentiments it will create. Seems to signal management confidence. So this is also something which is giving showing that signal to the public that management is more confident about the company.
Reach out today and let's do it professionally.